How do you negotiate for owner financing? Hey guys, welcome back. My name is Daniel. Welcome to our YouTube channel. Today we're going to be talking about how to negotiate for owner financing or seller financing. But before we go ahead and do that, guys, please like this video, subscribe this video as well. It really helps us push out the content. So let's go ahead and get right to it. So I've done my fair share of owner financing deals, and also meaning I've sat in my fair share of owner financing negotiations. And today I'm going to help you guys kind of navigate through certain things. And I'm also going to provide for you guys a great resource at the end, which is completely complimentary, that you guys can complete the knowledge that I'm going to share with you guys in the next 10-15 minutes or so. So number one, we got to talk about the mindset. When it comes to negotiation as a whole, one of the worst mindsets that for some reason people want to go ahead and take and have, when they're negotiating, is that they want to compete with the other individual. When it comes to negotiating, a lot of individuals will ask me, hey Daniel, what is like the one phrase or what is the one technique that I could say to a person to get them to do what I want? Guys, it doesn't work like that. And for me, if there was such a technique, I wouldn't want to know it and I wouldn't teach it to anyone, because that is not a sustainable way to build a business. You want to build relationships. And how do you build relationships? Is through collaboration, not competition. Collaborate and not dominate is what I always say when it comes to negotiations. Your job is to create a win-win scenario. Now, what do we have to do to create the biggest win-win scenario? Well, we got to define what is a win in the first place. For example, do you guys watching this video right now, right? I know you clicked on this video because you want to learn how to negotiate for owner financing, but have you clarified and defined what makes it a win for you in a real estate deal? Does that mean cash flow? Does it mean equity accumulation? Does that mean having it in a good area with low risk? Does that mean higher risk with a lot of upside for building value and having income coming in? What does that mean for you? What is a win defined for you? So for example, for me personally, having a large cash flow is not a win for me personally. Now, if I had an investor or a passive investor invest with my deal and cash flow was a huge win for them, then obviously I would gear towards that direction. As long as we're within safe parameters, we're protecting our risk, we're mitigating our risk, I'd be more than happy to do that. But for me, a win is when I'm accumulating a lot of equity. For me, it's the opportunity for me to build value, increase my equity position, so that way the 10-year older version of me is going to thank me for what I do today. And also, how is a win defined for the person that you're negotiating with? Remember, not negotiating against, but negotiating with. What defines a win for them? And that's step number one, right? I'm going to share with you guys 3 steps on how I personally negotiate for owner financing. Number one is to identify their problems. Identifying their problems means asking a series of questions and also follow-up questions to see what are their pain points and what also drives them. Now, I use what I call the goals method to be able to ask good quality questions, because let's be real, not every single person knows how to ask good questions. Maybe that's something that you're struggling with right now. Not everybody knows what questions to ask, what to say. So this is maybe the reason why you clicked on this video. So I'm going to point you guys at the end of free resources, completely complimentary, in which the goals method is actually dissected and taught by the guy who invented it, who happens to be my very good friend, Levi McPherson. So I'm going to share with you guys a resource at the end on how to do that. So number one, identify their problems through asking good quality questions, asking follow-up questions, and figuring out what is their pain point and also what is their value. You want to find reasons as to why they'll make a decision, what gets them out of the bed in the morning, what defines a win for them. Step number 2, I use what's known as the line technique. Now guys, let me stress this enough. If they are an individual that does not need owner financing, so meaning based on their pain points and their values, they don't want owner financing, they much rather take cash, guys, give them the cash offer, right? Don't do owner financing if the situation doesn't call for it, right? We learned in kindergarten that square pegs don't fit in round holes. So if it doesn't call for it, don't do it. But if it does call for it, I like to use what I call the line technique, right? And I simply explain, and by the way, guys, I never say the word owner financing. I never do that because it may trigger a negative response. Maybe they heard a story from a friend, whatever it may be, but I don't want to trigger that negative response. So literally all I say is, hey, I'm going to give you 2 choices. Here's the second choice, right? The first choice is the cash offer. I'd be more than happy to do so, right? But here's the second offer. The second offer is actually based on all the questions I ask and things I heard from you. I actually decided and created a way where I can help you with each one of those obstacles and also the things that you value. So this is a scenario in which you would actually be the one financing me. So here's option number 1. So option number 1 is I give you cash. Now let's say for the sake of the example that, the building is worth $1 million, right? You're buying a 12-unit building for the sake of the example. And let's say the building is worth $1 million and they're asking for $1 million. At option one, I say, hey, I'm going to draw this line, right? So you guys see this line right here. It's not a pretty line, but I'm not a very good artist. I'm an investor. So I'm going to say, hey, here's option one. I give you the $1 million cash. $1 million. I'm going to go to a bank, or I'm going to, acquire some investors. I'm going to syndicate some funds. And I'm going to get you that $1 million cash. I believe here's where your biggest obstacle is going to be, however, if I were to give you the $1 million. Now, again, I'm not sure what your financial situation is, so you may have to talk to your CPA, you may have to talk to your tax professional after this conversation. If you like, I'd be more than happy to even get on the phone with them and also you do a conference call to explain what I'm about to tell you right now. But chances are you've got some taxes you got to pay. Now, predominantly speaking, now guys, before I continue with the video, please note that I am not a CPA, I'm not a tax professional, I'm not a financial advisor, I'm just a real estate entrepreneur who's got some experience under his belt, and I'm just sharing with you guys my experience, all right? Okay, we got that out of the way. My attorney's happy that I just said that. So we've got two different type of taxes that most people are going to pay predominantly. Number one is our little friendly capital gain tax, which means that if an individual has owned it for a long time and the value of the real estate asset has gone up, they're going to pay tax for that. And we're also going to pay what's known as ordinary income tax. Now, obviously, it depends based on their tax bracket. It depends on how much money they make, where they are financially. But predominantly speaking, most real estate investors and landlords that I negotiate with, their capital gains tax rate is at 25%. Their ordinary tax rate is at 39.7%. So on top of that, they may also have some debt service that they have to worry about. And they're also going to have to pay higher closing costs, especially if they're taking a full cash offer. So between the debt service, capital gains tax, the ordinary income tax, based on my experience, guys, again, this is just my experience. I've negotiated with a lot of different landlords in the past, and I've seen this play out many times. So maybe you have a different experience. But in my experience, the landlord will walk away only with about 60%, right? Maybe about 60 to 70% if that person's a little bit more fortunate. But on average, they'll walk away with 60%. Some people, guys, that I've seen sell their buildings have to bring money to closing because of the debt service, the taxes they have to pay, and the closing costs that they're going to have to pay as well. So I've seen that happen, guys, believe it or not, right? It's not a lot, obviously, it's rare, but I've seen that happen. So a lot of times they'll walk away with just 60% of what they're actually getting in terms of the offer. So just to be generous, right? Let's just say that number is 70%. So meaning that if I were to give them $1 million, they're going to walk away with $700,000. And this is exactly what I explained to the seller that I'm negotiating with. I sit them down and say, hey, listen, Mr. Seller, right? I don't know if you are familiar with this. Maybe you're not, maybe you aren't. But are you familiar with the fact that you're going to have to pay capital gains tax? Are you familiar with the fact that you're probably going to have to pay ordinary income tax? Do you know how much that is? Do you have some debt service? Have you, rung up the closing costs and how much you're going to have to pay? And ultimately, did you figure out how much money you're actually going to walk away with after you sell this building? If not, I highly encourage you to talk to your CPA, tax professional, et cetera, et cetera, et cetera, right? And this is what I draw out. And I explain to them, listen, Mr. Seller, I don't know your situation, but based on the questions I've asked, this could be a benefit. Now let's move on to option two. Now, option two is actually very simple. It's a lot more simpler than what meets the eye. This is actually a scenario where I would still give you $1 million, but instead of you receiving cash, you would actually be my bank and you would get it through installments. It's kind of like that scenario where would you rather receive $1 million today or would you rather receive, $10,000 a month for the rest of your life, right? It's one of those hypothetical scenarios, right? Now, granted, one is a little bit more safer than the other, but the beauty about it is it's a little bit more flexible with option two, and we can actually create an offer and a collaboration that actually fits both of us and creates a win-win scenario. So in this case, you would be my bank. And let's say, hypothetically speaking, I gave you about 10% down just because you want me to have some skin in the game, which is $100,000. Let's say you give me 4% interest, and let's say we do it on a 25-year note. By the end of that 25 years, I actually would have given you about $1.45 million at the end of that 25 years, meaning that you actually make money financing me. So you actually make 4% every single year by you being my bank. Now, again, we're gonna have to have a deeper discussion into what all this looks like. But for right now, right, Mr. Seller, would you rather want $1.45 million or would you rather want $700,000? Which option are you more interested in? Now, at this point, of course, guys, 90% of the people say, hey, let me see what option 2 is, right? Let me get a little deeper into what that looks like, right? But step number 3 is very important, right? And I'm gonna jump to step number 3 right now because it's very, very essential. You never in a negotiation ever wanna push something that they don't wanna do, right? As soon as you push, they're going to resist, right? Instead of chasing, you want to attract. You wanna create the space for them to walk into. So you want to create a couple of options, right? And that's very, very important. It's actually a very important sales tactic. It's a negotiation tactic. You want to give them the illusion of control. You want to make it seem like they're in control and they're the ones making the decision. Remember, at the end of the day, guys, people don't want to be sold to, they want to buy. So here's what I say at the end of me presenting the line technique. I say, listen, Mr. Seller, right? Would you rather want $700,000 or $1.45 million? Look, I can go and go to the bank, get cash. I'd be more than happy to do that. Now, granted, very low chance I'm going to give you that $1 million when it comes to cash. Chances are we're probably going to go back and forth for months. We're going to negotiate, right? You're going to think I'm lowballing you. I'm going to think that you're stubborn and you're not moving. You're not willing to work with me, right? It's going to be ugly, but nevertheless, I can still go down that route if that's what you genuinely need and what you're genuinely looking for. Or I can go with option 2 where I give you 1.45 million. Now again, that option is something I kind of came up with based on what I heard you say about your obstacles and all the problems you're looking to overcome. That's something I created just for you, right? And it actually would be a win-win, but I'm gonna give you the option, right? It's completely up to you. The ball's in your court, right? You never, again, wanna press. Let them make the decision, right? And if they're smart, they're gonna pick option 2, right? If they go with option 1, then that's when you start, unfortunately, having to go through that process. Now, is there a technique? Are there ways that I do in terms of negotiating cash offer? 100%, right? 100%. But I think I can kind of speak for the whole video and for you and me that there's a lot more to this topic of negotiating for owner financing than what I just said. So I encourage you guys to go ahead and check out this book. This is the free resource that I've been talking about. It's 292 pages on the 4 strategy, which is how I actually went from 0 to 75 units in 1 year without using any of my own money, any of my own credit. I have case studies in here. I spent an entire chapter talking about owner financing, how to negotiate for it, what is it, and how to raise capital, right? The 4 strategy: find the deal, owner finance it, raise the capital, cash flow, which is property management, and E, expand your empire, which is all about scaling your real estate portfolio. So if you guys want this book, again, guys, it's completely complimentary. All I ask you guys to do is pay for shipping. So again, if you want to read it, go ahead. Because for me personally, as the author of this book, as the guy who wrote a vast majority of this book, I only want people reading it who are actually going to enjoy it and do something with it and use it. So again, guys, click on the link in the description below for you to get access to complimentary 0 to 75 units in 1 year, the 4 strategy, 292 pages of what we talked about today, but we're going much, much deeper. So again, guys, thank you for watching this video. I'll see you guys in the next one.